Specific action to track for you besides the markets? Well, and we'll get to that in just a bit in our top 10 segment. We'll look at Eicher Motors, Apollo Hospitals, Zomato, Indian Hotels, Ashok Leyland, as well as Berger Paints. Well, they are stocks that should be reacting to positive news flow. While you have Bata, Trent, JSPL, Muthoot Finance, they are stocks that could open up in the red. But given the kind of market situation that we're likely to open up to, let's see how long they stay in the red.
Most important to get the global setup, and we have some very special guests joining us to help us do that. Jahangir Aziz is head of emerging markets, economics research and commodities at JP Morgan. Arvind Sanger is managing partner at Geosphere Capital Management, who is joining in as well. Gentlemen, great to have both of you here. Thank you very much for your time. Markets are markets, Jahangir. The 20 basis point miss in the core CPI inflation number, sparking a near, 8% rally in the Nasdaq. Just square that for us, Jahangir. And what did you make of the price action? Let's begin there.
Look, the market clearly reacted to the fact that the core inflation was lower than what was expected. And that sort of reinforced the idea of that the door to a step down in Fed rate hike in December would be open. Remember, the Fed said that if the data supports, they would step it down. But, one needs to remember in all of this, euphoria, one needs to remember that the non-farm payroll just 2 weeks back was actually stronger than expected. The labor market is slowing, but not slowing as quickly as the Fed would like. And on top of that, one also needs to remember that the Fed made it very clear that even if the pace was a step down, the level of a Fed funds rate would be much higher. And I think that we might get a 50 basis points rate hike in December, but I think we will have to brace for a much higher rate, which will be in restrictive territory for a much longer period of time.
Okay, so a much higher rate. What do you see as the way forward then, Jahangir, back home here? I mean, what do you think the RBI could do? Are we also all set for higher rates? And from a long-term standpoint, right, from a macro standpoint, do you think at some point, perhaps we've peaked in this cycle, not only in the US, but in India as well, in the rate hiking cycle?
I think in the US, clearly we haven't peaked. There's a long way to go. And I think in the case of India, I think the task is much harder. I mean, if you look at the amount of macro risk India is bearing at this point in time, so let's define macro risk as the sum of the current account deficit, which is running, at 4%. You have a fiscal deficit that's running around 11%. You have inflation that's running at 7%. And the only compensation that the investor gets is about 7.5% in the 10-year yield. That is not what normal emerging market countries compensate for macro risk. I think the amount of compensation that India is offering for foreign investors to come in to India, given the macro risk, is too little. And therefore, I think you will find pressures on the currency, not today. Today will be a great day, absolutely. But the pressures on the currency continuing as long as India continues to have these high current account deficits and fiscal deficit.
Hi, Jahangir. Morning. I want to talk about the currency space itself. The dollar index went flying away to around 115, and that's cooled off. So do you think this is just a cool off and we get back towards, those elevated levels? Yeah. And what about the rupee? At around 83 odd, do you think it's peaked out, or do you think it still has higher levels to visit?
Again, if you look at what are the big drivers of dollar, right? I mean, the US most likely is going to continue to widen its growth differential with the rest of the world. China is going to perform, pretty badly in the fourth quarter and probably also in the first quarter. Europe is going into a contraction. So the growth differential of the US with the rest of the world is actually going in favor of the US. On top of that, the interest rate differential, and I'm not talking about the pace of rate hikes, but the level of rate hikes is clearly going to widen again. And therefore, if both the growth differential as well as the interest rate differential is going in favor of the US, it is very difficult to see that the dollar is actually peaked. Most likely, the peak is still ahead of us. We will go through these bumps, but clearly the level of dollar where the dollar can go is the peak of the dollar is still ahead of us. And given the fact that the peak of dollar is ahead of us, and given the fact that, as I pointed out, India does not provide enough amount of compensation for the very significant macro risk, given the size of the current account deficit, size of the fiscal deficit, and the inflation, it is very hard to see that the rupee actually is bottoming out at these levels and starting to appreciate. That's a very, very difficult path ahead.
Arvind Sanger is with us as well. Jahangir, the market pricing of the Fed's terminal rate fell to 4.9. You're saying it's going to be much higher?
Look, we had 475 to 5. 4.9 is somewhere between 475 and 5. We'll have to wait and see how the non-farm payrolls, the labor market behaves in the in the next few months.
Right.
And the risk that we have is probably a higher rate than 5, then lower rate.
All right.
Let's put it that way.
Fair enough. Arvind Sanger is with us as well. Arvind, thanks very much for joining us. It's an important day with very large moves that we are responding to. We will respond to. But how do you look at these moves themselves? Are these very large outsized rallies in what has been a very entrenched bear market in the US? Or do you think this is the start or reversal?
I think, clearly we don't know, as I've said in the past, what is a bear market rally and what's the start of a bull market. But clearly today the hope is that the inflation cycle worst is decisively behind us and that inflation can come down rapidly and Fed is towards the end of its rate hiking cycle. So that's a bull case, right? The bull case is that we can have a Goldilocks scenario, inflation comes down, rates go up to, 4.5 to 4.75 to 5, and we don't go into a recession and everything turns out fine. I remain of the view that there's a much higher probability that the optimistic scenario will turn out to be just that, too optimistic, and that we will end up having to deal with more trenchant inflation, which might require slightly higher rates, and that with the risk of a recession quite high, markets could roll back over. But that's a U.S. story. From an India story standpoint, if U.S. is not going into a terrible recession, then Indian earnings cycle is on a solid footing. It will have to watch what is going on in the rest of the world. But you could have China doing better next year. Europe is already in a stagflation. It could be doing a little better sometime in 23. U.S. could be going into a recession. So there's no clear answer on how the global cues in 23 competing with each other will play out and how that will impact India. My sense is India is kind of, not cheap by any stretch, but one of the few places where people are able to hide out with earnings risk much less than in many other parts of the world.
Is there an outsized gain for this market, Arvind, that we're looking at, the Indian market particularly? Because now the global risks seem to be abating. Maybe the worst of the rate hike cycle is not done just yet, but at some point it will be. And you have earnings improving as well. So are we looking at a big rally in the Indian markets over the next, say, 6 to 12 months?
I think we're looking at a decent rally in the next 6 to 12 months if that comes to pass. But I don't see India, which has been the star performer this year, being the short-term star performer. I think there are other markets like China that are hugely oversold that could actually have a bigger rally off the bottom if zero COVID goes away than India would. But if I look at India over the next 3 years, if I take a more medium-term view, again, if I were to make a relative call, India has one of the better sustainable growth stories with a lot of benefit from, friend-shoring away from China benefiting India, as well as a lot of, macroeconomic fundamentals, assuming inflation in India is not going to go out of control, providing support. So I think the Indian story may not be the rocket ship from here, but it's already been the best performing major emerging market. So I think it can continue to perform, and that's the way we are thinking about it.
Okay, all right. So India is a pick, because of it offers earnings growth. But Arvind, I just wanted to ask you, I recall a month or so ago you were telling us that for the global markets, for the US market, this is a pullback in a bear market actually. We've seen a big rally out there. Do you want to change your stance now? Or do you believe that this is the actual thing?
No, bear markets don't end with dramatic rallies. Bear markets end with apathy and fear. And maybe we got the fear in the last few months, but as I said a few minutes ago, I still think that the US having a recession in 23 remains the greater probability. And if that is the case, then a one-day rally on better than expected inflation numbers does not suggest anything other than just a massive positioning reversal because a lot of people were short and a lot of people were underweight the market. It doesn't suggest that the risks of a recession have disappeared, and therefore the risks of a market going down again have disappeared.
Both of you are not pouring cold water.
It's called tempering the enthusiasm, right?
I think that is important, right? I mean, otherwise you get carried away. Markets get carried away, and they will overdo it at some point. But the question is, at what point does that overdoing happen, and how long before we get to that point? So interesting views from both. Jahangir, in the US, there is this political change, which is also a little bit of political change which is underway. There's no red wave as many were expecting. Are there any implications for policy, etc., at all? Briefly, yeah.
No, I mean, right now, it is still up in the air. I mean, we don't even know which way the Senate has gone, which way the House has gone. So it's very difficult to say, where that means anything for policy going forward. But I think there are just this year itself, even in the lame duck session, there are a couple of important milestones. I mean, there is the continuing resolution problem. There is a debt limit problem. So even if we are not talking about the big things, right, on climate change policy or immigration, etc. But I think there is already something that needs to be addressed, and the composition of the House and the Senate, especially the House, will matter in the case of the changing the debt limit and for the and for the resolution to go through. So I think there are important implications, even if I don't go into politics, to which way the House and the Senate falls. And we don't know anything about it.
Well, we don't know anything about anything, right? At the end of the day, it's all just a guessing game here. Sorry, I didn't get that, Jahangir. What did you say?
I was saying that, but in answer to your first questions that we were pouring cold water, both Arvind and I, today will be a great day. So at least take one day at a time.
Well, if you wake up on the right side of the bed, every day is a good day, right? Thanks a lot, Arvind and Jahangir,
that's good.
For joining us, and have a good one. Have a great weekend. Fridays are always a good day, right? Because you're heading into a weekend. But that's the word coming in from Geosphere and JP Morgan. Don't be too exuberant in a market like this. The valuations in India are on the expensive side.
It's a very simple way to look at things, but the fact is that the US was in an entrenched bear market, whereas we are at a newer high.
Yes.
So 8% rally on the Nasdaq isn't going to be a 8% rally here, because you're not down 25% from highs like the US is, right?
Yeah.
So I think that's one of the points which both Jahangir and Arvind also made. But what this does is it takes away this global pressure, this continuous global pressure. If this were to last, that is, right? It's just one day, but we'll see. Asian markets are on your screen. They'll just come up on your screen. I think we've got, 4.5% rallies. But this is also made up of markets like Hang Seng, which are so beaten down, which are seeing a bit of a bounce back. But Taiwan and Hang Seng on your screens. SGX is also indicating a 1.8, 1.9% kind of a move. We'll take a quick break here. We are back. Our list of top stocks to watch out for, and lots of them on the other side.